You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, Jonathan Rose, and welcome to Masters in Trading Live. Masters in Trading Live, I get on here every day the market's open, 11 a.m. Eastern Time. Go over the market, share some thoughts. Once in a while, we'll share our trade of the day. We are live, so if I goof at all, we're live. I'm going to goof once in a while. But what are we going to talk about today? Big moves in the market. CPI comes out, inflation potentially going lower. It looks good. Market's up an absolute ton. We've had a lot of volatility these last couple of days. Telvin, we good? Telvin's just fixing some things while I'm live here. I think we're okay. We are okay. I told you, we're live. We're going to make little goofs. I got the chat open. Thanks, everybody, for joining. Brian, John, Saul, Jeff, Bill, Deborah, Adam, thank you guys for joining. I appreciate it. So let's get into it. Things are moving. We're going to talk today about our community. We're going to talk about the expected move. As traders, as investors, there are really two main bets you can do. You can bet on direction, whether a stock goes higher or lower, that's one. Or the second thing you can do, and I think is the easier of the two, is you can bet on volatility. You can bet on movement, expected moves. How much can a given stock move? That's volatility. And volatility helps give us perspective, especially when the market's really moving. So I'm going to walk you through and explain exactly what I mean. Let's head over to the screen. Again, I got the questions up. Lisa, thank you for joining. Adam, Deborah, thank you guys all for joining. So let's start off with a little shout out to the Discord, because with the market moving, we have some good trades that we want to share. Micah was in the 220 calls on Monday, was able to sell half for 140%. Today, locked in about 300%. Jerry here, Jerry did a strangle. A strangle, smart, because a strangle, you're betting on both sides of the market. You're just betting for movement, way higher or way lower. We ended up going way higher, and Jerry was able to make money on the calls. I'm sure the puts are going to be losers, but that was a big enough move that Jerry was able to make some money. Twinkles here. The last dip in the Qs helped her break even yesterday. And then we also have another nice trade in the Qs right here that I'm kind of blocking. So congrats, a nice day in the Discord. Let's talk about quantum. The quantum names are moving all around. And the quantum names, if I pull up quantum, let's do this. And I'm going to block our chat a little bit, but let me go to our quantum names. Okay, quantum AI, QUBT. Here's QUBT. Here's a name. Actually, right now is our favorite name in quantum. Now, what happened? The CEO of NVIDIA came out and said quantum is garbage. So all quantum names got killed. Well, a CEO can't just crumble an entire industry. We called BS on that, and then today, Qubit goes straight up. What I expect is going to happen with these quantum names is QUBT. I wouldn't be surprised if she goes straight down. And you know what? I wouldn't be surprised if she goes straight up, because nobody really knows where to value these quantum names. But when I first started, we talked about that traders can bet on two different things, right? Traders could bet on movement, whether something goes higher or lower, or traders can bet on vol, whether we see more vol or less vol. I like betting on vol. So let me show you how we bet on vol, but also this allows traders to be more confident and stay in their trades. So looky here. Let me clean up this a little bit. Spring cleaning. Get that chart back. Where'd you go? Again, this is so nobody questions that we're live, because you can see sometimes it takes a little bit to set up my charts. So let's look at these names, because I want to show you how to be confident in a trade. Because we look at these quantum names, and the quantum names, we have Rigetti. It looks like that. We have QUBT. It looks like that. We have IonQ. It looks like that. Now, what's something that you notice with all these quantum names? This is the audience participation portion of our event. What's something that you notice with all the quantum names? We have IonQ, QUBT, even we could put up ARQ, ARQQ, QBTS. What's something that you notice? Madeline, thank you for participating. Good morning. Madeline is a new trader. I know this because Madeline joined us yesterday and shared that she's a new trader. Thank you, Madeline, for participation. So QBTS. John went from low to high vol. Oh, here, watch. All options have what's called their expected move. The expected move of an option is the value of the straddle. If you add up the at-the-money calls plus the at-the-money puts, that's going to get you the expected move. So when we pull up a name, Demetrius. Nailed it. All of these are staying within their expected move. Now, we're looking at QBTS here. Why is November has such a small expected move compared to December? Why does December have such a small expected move compared to January? The reason is market makers understand volatility, and market makers are telling you the range that you could expect from this stock. QBTS stays within its expected move 79% of the time. So when QBTS trades outside of its expected move, you shouldn't be that surprised if it sells off back into its expected move. Okay? Where is their support? At the bottom end of the expected. Hell yeah, it's volatile. Quantum is the most volatile name that's out there. So look, QBTS, IonQ. So these are the lessons that I want you to learn. Why is this so important? November vol, still higher than October, right? Look at the vol in December. Look at the vol in January. Volatility continues to increase. It continues to increase. Why? Because the NVIDIA CEO can go on their conference call and bury this entire sector down 50%. Nobody knows where these are valued at. So therefore, you can trust the market makers and the expected move because there's optionality at the resistance and at the support. The name that we played, QUBT, had the exact same behavior as all these other names. Okay, isn't that cool? Janet, we get the expected move in all access. I build these and I share this with everybody in our all access. We're working as a community. We're always building new tools to follow the market. But it's not just in quantum, guys. Look, let's go to the QQQ. QQQ is one of the most perfectly valued indices, right? Why is it perfectly valued? Because it's one of the most highly traded. So it stays within its expected move 87.5% of the time. When it gets out of the expected move, when it touches the expected move, those are really, 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 really good trades. If a name constantly takes out their expected move, the market makers are just going to add more volatility to the expected move. This week, it's a big week because we have bank earnings. And we had two big bank earnings. I don't know if it was yesterday after the close or this morning. JP Morgan and Wells Fargo. Both of them came out really strong. So we had really strong bank earnings. We had a CPI number that's showing less inflation. So the market's going to trade higher. But let's look at those key bank names. JP Morgan. Look at that high. JP Morgan. She trades right up to the expected move and then bails. What was the high of JP Morgan? 252.08. Sold off about $2 since that. 252.08. What do we have with Wells Fargo? WFC. Again, right up to its expected move. But there's something to notice about Wells Fargo that's very different than JP Morgan. I'm going to put it on 3 years. I like to give us a little bit of room so it just presents better. So I'm just going to do this, apply. Okay, and that gives us just a little bit more room here. Going back 3 years, here's Wells Fargo. And again, trades right up to its expected move. Trades right up to its expected move. Here, closed outside of its expected move. But Wells Fargo stays within its expected move 66% of the time. So it's more volatile. The market makers are not as good at pricing Wells Fargo as they are at pricing JP Morgan. JP Morgan stays within 75% of the time. You can use this on the volatility measures as well. How about the VIX? VIX offered trading right down to the lower end of its expected move. So today we have a live class for everybody in our short-term options, and we are going to continue talking about volatility and the expected move. Hopefully you guys enjoyed that. The takeaway from this is traders can do two things. You can bet on movement, on direction, higher or lower, but the professionals, they're betting on movement, they're using volatility, they're using the expected move, they're working in a community. For anybody who's interested in joining us, you can leave a comment under this video or just in the chat. We'd love you to join us. Everybody in All Access, you guys don't go anywhere. We'll be right back.